There's no way to skip it. You'll never be prepared enough. You'll never be able to study enough to not make mistakes. And when you realize that making mistakes and failing forward is just a part of the trial to get to the other side of that, those murky waters, the second you sort of change your mindset with that approach, it makes getting back up over and over again a little bit easier.
Welcome to the Bulletproof Cashflow podcast. Let's get into the show.
Hey everyone, this is Augustino. If you heard the saying, your net worth is your network, then you know it's true. Your network is central to your success as a real estate entrepreneur. And it's these relationships that really provide the opportunities and the open doors. Well, today's guest, he understands this and has raised nearly $80 million in equities for his deals. He has many words of wisdom as his company currently manages well over $300 million in assets, comprising nearly 3,500 units. Since 2015, he has hit the Inc. 5000 list twice and has grown his company, Barratt Asset Management, to a best-in-class, vertically integrated asset management company. Now, with all that, I'd like to welcome my good friend, Ivan Barratt, to the show. Hey, Ivan, thanks for coming on, man.
Augustino, it's so good to see you, man. And I am so honored to be back on the show. I saw this pop up on the calendar a few weeks ago and was thrilled. We haven't got to hang out in a while. And I'm, again, just thrilled to be here and hope I can deliver some good value for your audience.
Well, I have no doubt you will. Well, if you like what Ivan has to say, you can reach him via his website at barrattassetmanagement.com. If you like our content, please don't forget to leave a comment and rate the show. And finally, if you text the word freedom to 202-410-4202, you'll get our free ebook, The Bulletproof Guide to Finding a Broker. Okay, Ivan, maybe give the listeners a bit of information about your background, how you got started.
Sure. Been in real estate, almost my entire adult career. Grew up with a father. He's an attorney. He had some rental properties. I had an uncle that didn't finish sophomore year of high school, but very successfully grew a commercial real estate portfolio. Another uncle owned apartments. And so I'm pretty lucky. I got the entrepreneurial bug very early, and I'd always wanted to own real estate. And I thought, why would you ever want a real job? Instead, why wouldn't you just get a lot of duplexes? At the time, I was thinking I'd own lots of duplexes and just watch the rent checks come in. So I get out of school, I get in, I read Rich Dad Poor Dad at this point. I'm 20 years old. And I get into real estate development with my first mentor, and I literally proceed to forget everything I learned in real estate and was primarily speculating as the low guy on the totem pole in a development shop, having a lot of fun, learning about property management, asset management, zoning, a lot on market feasibility, which I still use to this day, but forgot all about income property. I house hacked a duplex, and that was it. And 2008 hits. And it ends up being a pretty tough time for me. I'm negative cash flow, I'm negative net worth, and really just got back into the basics, soul searching, trying to figure out how I'm going to stay in this real estate game and how I'm going to grow a company of my own. And it finally dawned on me, and I started getting my idea around cash flow. Took my eyes off of trying to get some big properties and just started off small, buying some small deals and using the bigger pockets BRRRR method. They hadn't coined that yet, but I was buying and renovating and renting and refinancing and repeating using hard money. And at the same time, what really allowed me to scale was that I started a property management company. And I managed anything I could get my hands on as long as I didn't have to carry a gun. And I started managing for homeowners that were landlords by necessity because in 8, 9, 10, they couldn't sell their home, condos, townhomes, started working with some investors who were buying properties in the Indianapolis area. And out of a solopreneurship style company where I learned everything I could and did everything on my own, I started growing my team and processes and platform, started buying small apartments, made about every mistake in the book, raising money along the way, and continue to grow the management company. Whereas today, as you so eloquently put it, we're having a lot of fun. We're approaching 100 employees, I've got a phenomenal asset management team, my executive leadership team overseeing all the property management teams. Found my business partner about 5 years ago, actually this month. Great operator, great peanut butter to my jelly sandwich, the yin to my yang. Together we're stronger than us apart. And I get to spend a lot of my time now talking to investors, raising equity, looking at the big picture, focused on strategy of the company. And it's almost like watching another kid grow. It's like my fourth child. This beautiful organism of people that are really taking our vision and our ideas and our culture, and now they're running with it. The execution of our business plan is much more their responsibility today, and they deservedly get a lot of credit, the lion's share of it, for how well we've been able to do as far as our track record. Today, we rarely manage for anyone else. That's going away primarily as we continue to only manage assets that we participate in and can control. The management company is there for the execution of my wealth strategy, and my investors. We take the P and LP very seriously. It's a partnership.
Excellent. So, I mean, there's a lot to unpack there. So it sounds like at the beginning, you made a lot of mistakes, and really it was a lot of trial and error, right? So,
Oh yeah.
looking back, and I mean, obviously you learn a lot. I mean, everyone should learn from their mistakes. I mean,
I call it paying tuition.
Right.
Now, and that's how I had to look at it. My dad had a lot of sayings, one of which was mistakes are stepping stones.
Right.
And learning as an entrepreneur that failure is a part of it. There's no way to skip it. You'll never be prepared enough. You'll never be able to study enough to not make mistakes. And when you realize that making mistakes and failing forward is just a part of the trial to get to the other side of that, those murky waters, the second you sort of change your mindset with that approach, it makes getting back up over and over again a little bit easier.
Yeah. Now, would you say though that you could have taken a shortcut by maybe choosing a different mentor, or maybe you had different mentors? I'm not sure, but maybe it was through, I don't know, various mentorships. Do you think that would have made a difference, or were you like really headstrong about getting your things done the way you wanted them done at the time?
Yeah, there's a little bit of truth in both those routes. I think that there's a lot of folks out there that might be listening that want to do something similar. And I'll just say I've invested for 2020. I probably invested almost $150,000, well into six figures, in masterminds and coaches. Now, those coaches look a little bit different today than they might if you're starting out in real estate. But my top coach right now, she's $5,000 a month. And I'm getting a phenomenal return on investment. So I'm a big believer in coaching and being in different masterminds, some real estate related and some just entrepreneur and business owner related. I get a lot of good information from other entrepreneurs and company heads and owners of businesses that aren't in real estate that I can learn from. Because at the end of the day, we're growing an operating company. We are not a small business, my friend. We are a big company that today happens to be small.
That's right. Excellent. I love that outlook. I do the same thing. It's I already have 25,000 units. I just need to get out there and make it official, right? It's kind of like that.
There you go. Absolutely, man.
That's right. And something else I want to touch on before we go on to the capital raising part of things is you mentioned your partnership. Now, sounds to me like you have a good, strong partnership. And it's funny how you said that you guys are better together than you would be if you were apart. Right. And that's quite interesting, because I think that many people underestimate the power of a good partner. Right. And in that same vein, like if you could find someone that without you, I mean, they'd be fine, but with you, they're even stronger, right?
Well, how I characterize it, just to sum it all up, and if you want to, first of all, if you want a better partner, be a better partner yourself, right? That works in marriage too, and in the marriage of business partnership, I say it tongue in cheek, but my partner by himself, 5 years later here would own maybe 400 units on his own. And if I were on my own, it would have crashed and burned a long time ago. So it's, it's the difference, right? I can get up in the clouds. I can see the vision. I can look far ahead and say, okay, let's hire this next key person. Here's how we push. Here's how we create this culture, right? But my piece that's missing is I'm not a great manager. I'm not a great executor. I am awful at minding the details. Well, maybe not awful, but mediocre at best.
Yeah.
I did it for a long time, and I had to grow that as a solopreneur to get to a point where I was a good partner for somebody else. But what really allowed us to bend that growth curve is for me to learn how to get out of the way of people that were far better than me in areas or aspects of the business. And that's true for my partner who's COO and president of the company, and true for other people in the business, so much so that I've often told some of our leadership team that if something I tell you to do gets in the way of you doing your job, feel free to ignore me.
That's funny.
Thank you.
But you know what, though? I will say this, that one of the things that in our coaching, what we talk about to a great extent is when it comes to these partnerships, is try to find someone who's opposite of what you are. So if you're an action-based person, try to find a practical person. And if you're if you're super practical, try to find an action person and I'll push things forward, So that's
what's been a miracle, a drug that I can't get enough of is my partner and I are almost exact opposites.
Yeah.
Now we see eye to eye on things a lot, but he's a little bit more conservative by nature, right? So out of 20 ideas I have, he's able to shoot down 17, 18 of them, right? I've seen so many partnerships where there's two people and they've got so much similarities, and those partnerships don't last long, or they don't get very far.
100%. And that's why whoever's listening right now, if you're considering partnerships, which I strongly think you should, this business is all about partnerships. It's a team sport. Try to find someone. Go ahead.
If you're a visionary, one of the first indicators that you may have found a good partner is that you don't like them very much.
Now, why is that though? What would be what's the thing about them? Because they're not like you. Is that what it is?
Yeah. As a sales guy, a business development person, right? A visionary entrepreneur.
Yeah.
I tend to want to hire people that I like, that are like me, that I see myself in. Now, that's great if I'm hiring a salesperson, somebody to go out there and drum up business. But for any other seat on the bus, I've got to realize that my blind spot might be hiring people in those other positions.
Yeah.
And being able to recognize those blind spots and again, get out of your own way can be hugely beneficial.
100% right. I mean, you have to hire for the seat. And I think that's one of the things that sometimes gets in the way of us doing our thing, is that we're trying to hire someone like us and it's not always the right thing. Because believe me, you don't want me being your CPA. You don't want that.
Yeah. Here, man.
So let's get into that then. So as far as you being like biz dev, and biz dev account is more than just finding assets to buy. You're also reaching out to capital partners. You're reaching out to investors and getting them to really believe in the vision and throwing down and partnering with you. So
yeah, at this point, I don't even look at it. I don't even look at a deal until my partner and his team say we think we got a deal. I love going out and touring real estate. Love kicking tires. Love looking at land. But it's not the highest and best use of my time anymore. It is developing and responding and cultivating relationships with high net worth individuals and families, which I've been spending as much time as I can on for a long time now, and happy to share any value I can.
Yeah. So let's get into that though. So let's say someone's listening right now and they're not sure what to do. And I think that many of those limiting beliefs that impact everyone, I'm sure it impacted you when you were first starting out. It impacted me when I was first starting out too, is that who's going to listen to me? Why should I bother? All that kind of stuff. So what sort of words of wisdom do you have for someone at that stage right now?
The first thing that came to mind was, when I was going after my first 112 unit deal, I had done some smaller deals. This was my first one with on-site staff. and I'd raise $1 million. And boy, was I stressed and scared and nervous. I mean, so much so that I had so much stress that I was breaking out, with stress. And I really had to force myself to just sort of put my head down and work through my daily discipline. And so one thing I want to tell a lot of people out there that are looking to get into this, and like you mentioned in the beginning, there is so much capital in your network that you're probably not even aware of. And so in the beginning, I made a list of everybody in business that I knew. Anybody, my wife's uncle, for example, anybody in my network, I just kept adding to this list. And just instead of going out and pitching people, I just took people to lunch. I took them out to coffee, wherever I could get on their schedule. I always paid, even when they tried to pay for me. And I would just tell them what I'm doing and say, hey, can I just run this through you, get you to ask some questions? I'd just love to get your input on it, right? And most of those people didn't invest, but a few did, and that kept growing. And I focused on it almost like you were at a workout, right? Or any new habit you want to form. I had to get this much dollars, so that means I have to get in front of so many people. And to get in front of so many people, I have to make so many calls, so many emails per day, so many follow-ups. And one of my biggest investors to date, it took 3 years of conversations before he invested with me. And today he's got maybe 12 million with me.
Wow.
Yeah.
Nice.
Yeah. And there'd be times where he wouldn't respond to an email or a text. And instead of thinking, okay, this guy's not going to invest, I was so passionate. I believed so much in what I was doing that I would continue to follow up, not hound somebody. It's a little like dating. You don't want to stalk somebody, but continue to follow up, reach out, get a feel. Are they better responding to email? Is texting more something that they'll respond to? Phone calls, and continuing to stuff my pipeline. Always stuffing it with new relationships, and getting the word out there and getting attention. But today we're in, I think, 35 states and a few countries as far as where our investors are located. I wouldn't be anywhere close to that if I hadn't started building momentum, building a track record right here in Indianapolis, Indiana, with people in the community, whether it's the country club or the local networking event of any kind, or a meetup. Is getting out, getting in front of people, making sure they know what I do, right? Which was different than what I had been doing when I started raising capital, right? People thought I was just managing single family homes in young hip areas and duplexes. They didn't know I was buying apartments, and they wouldn't know if I didn't get out there and get right in their view, their view of or their what's the word I'm looking for? Right in their face, but not in an aggressive way.
Right. You're telling them what you're about and what you're doing. And like you said, they may not invest today, but maybe at some point they will. I mean, there's investors I've been speaking to for years, same thing. It's like it took a couple of years before they threw down anything. Right. And
this happened to me just this year. I had a guy that'd been on my slow drip list for 3.5 years, radio silent. His first 2 commitments were $300,000 a piece. I think a lot of entrepreneurs that want to grow a capital raising business or real estate business all around could really benefit from more sales training and more general entrepreneurship training. It gets to a point where reading another real estate book, you're going to have diminishing returns, right? So then it becomes self-development. It becomes sales training, influence, persuasion, which is a really phenomenal set of skills when you marry it with something you really believe in.
Now, is that what you did then? So part of your self-development, aside from getting out there and taking a trial by fire, so to speak, I'm assuming then you must have also put some time and effort into sales training, into really learning the psychology of how people buy and how people interact with others, right?
I still listen to a lot of training content from time to time. Not as much as I used to, but in the beginning, a lot of training content.
Yeah, it's absolutely critical, and it's funny because we have a capital raising course as well that we're doing a trial on at this point, and it's the same sort of thing. But it's all training around sales and marketing, specifically the sales part. So marketing pulls them in. Sales, you're telling them what you're about, and they're probably not going to buy today. They won't buy today. I think much like what you said. I mean, the same thing that happened to me. It's almost like they're sitting by the sidelines, keeping an eye on you to make sure you're actually going to deliver what you say you're going to do. And then when they feel comfortable, then they're ready to buy, basically, or ready to invest with you is really what it is.
You almost have to think of it as selling a high-end product, a high-end financial product, right? It fits into somebody's investment portfolio. There's lots of advantages. There's some disadvantages. Nothing is perfect, right? It's illiquid in nature, so it shouldn't be something in their illiquid category. But it is, at the end of the day, a product. But if you do it well and you're very disciplined in the other areas of your business, you can offer this superior high-end product that a lot of high net worth individuals and families desire for all the right reasons. And then it just becomes a getting out there, getting in front of them, getting in front of their advisors, and stuffing that pipeline with potential new relationships every day, always, in all ways.
Yeah, that's right. So now, what are you doing these days then to maintain that pipeline or to keep it growing? Are you doing anything special? Are you doing anything different, like in terms of new clientele or new potential clientele, and even some of the old clientele? Like, how are you currently engaging with them today, or doing like any special annual parties or anything else like that? Like, how are you doing all that today?
Yeah, we've definitely done some entertainment in the past, even invited out-of-town investors to come into town. This year, that got trampled a little bit. We send out varying degrees of gift baskets at the end of the year. We pride ourselves in being high communication, high touch. I try to reach out to investors or my team periodically with good information or relevant info, or just a check-in, aside from only hitting them up when there's a real estate opportunity. And just, again, try to develop and nurture that relationship. It's much easier to get a current investor to increase his or her position with you than it is to get a new investor. And in that same vein, our second largest source of investors is referrals from existing investors. So there's a lot of money in growing relationships with folks, treating them well, doing what you say you're going to do, delivering bad news quickly, because nobody expects this thing to go perfectly all the time. And when you do that, this beautiful thing happens. They tell their friends and other family and colleagues that, hey, this, Ivan and Ben is a good horse to bet on, and they've done this for me. And if you want to be in real estate and not have to deal with the tenant toilet issues, maybe you should give them a look. Once you develop that foundation of your own network and you grow your own network, which there's so much more value. I can't stress this enough. There is so much more value in your network than you realize. It just, people don't understand how to work that properly. And that's where sales training comes in. And once you get outside of that, you've got LinkedIn and Bigger Pockets, and there's all this other advertising, that we can do now as a 506C. But you necessarily don't want to go that route until you've gotten so far down the road.
Now, is that how you're pushing right now? Is that you're doing the 506C then instead of a B?
We've been a 506C now for, maybe 3 years.
How's it working out then?
It works out well. It allows me to advertise. It allows me to cast a wider net. If I get referred to you on Friday and you sign my docs on Friday, there's no issue there. We didn't form a relationship first, but I don't have to do that anymore. I've certainly had to turn down non-accredited, sophisticated investors. But I think as you grow your business, that can be a good thing for risk management as the operator. And out of millions and millions of equity. Every now and then somebody doesn't want to go through the verification process and says thanks, but no thanks. But that rarely happens.
Yeah.
Right. But I wouldn't necessarily go back in time and go to a 506C any earlier than I had. It's just sort of a natural evolution once you've gotten your network large enough to and your track record long enough to expand your reach.
Well, I think part of it though too is you really have to be good at marketing to do that, right? Like you really have to be able to hit that. Hit the Facebook ads, get in front of a lot of people, get them to be able to research you, see your track record online. I mean, that's a whole other game right there, right? That's a whole social media play, basically, is what it is. So something that you touched on that I want to explore a little bit more is when things go bad, because I think many of the gurus out there, they keep talking as if as soon as you buy your first building, you're going to be a freaking billionaire and you're going to instantly be lined up to buy the Ferrari, the Lamborghini, and have the boat in Miami. That's how it is, right? I mean, as soon as you buy that first 22 unit, you're done. You're set for life, right?
Set for life.
And so I think that causes a lot of people to just jump in and go crazy. But it's not always like that. Stuff always, hits the fan, so to speak. And I mean, handling the bad news and delivering the bad news is kind of critical to doing this business. You have to be able to to take a shot in the face once in a while, because you will get smacked in the face at least once in this business. So, how do you handle those situations with your investors? Like, and maybe what's one of the give an example of something that might have happened to you?
Sure. My earlier deals, a lot of things happened I bought a 35 unit, a 30 unit, a 15 unit. None of those went according to plan, not even close. They all ended up being positive returns on investment. One was a 9% IRR after 5 years because everything that could have gone bad went bad or went wrong. And we got through that. But, that same investor that invested 150 grand with me on that first deal, just me and him, he's with me today, and he's still in 8, 9, maybe 10 deals with me and participates regularly. And a lot of that was telling him, what's going on in real time. Like, hey, this didn't work. Here's what we're going to try to do to fix it. At one point on that deal, I'm very lucky to have my own management company, so I was able to suspend my own management fees for 9 months, maybe a year, to get it back on track and save some cash flow. So I was happy to work for free for a little while to get it back on track. That ended up paying off for us. 60 unit deal. My worst IRR on a syndicated deal was 17% on a 5-year hold. Still, not bad, right?
No, it's still not bad. No, not at all.
Yeah, not bad, but not as good as I'd hoped. And there was a year there where we had to suspend cash flow, suspend distributions until we got it refinanced. And once we got it refinanced, it was great. And then 2 years later, somebody comes along and makes us an offer we couldn't refuse. And at that point, it was one of our older assets, and 60 units can be kind of tough to run. So we sold it for an annualized return of 17%, and everybody was happy. But in the middle of that, when we had to stop distributing cash and had to wait for a refinance that wasn't according to plan, I had to be on the phone a lot. And my personal experience would lead me to advise any syndicator who hits a rough patch would be to personally call each individual investor and explain to them what's going on. It'll take more time than a webinar. It'll certainly take more time than a well-constructed email. But I think that the chance of that actually adding value to your stock price and your reputation as a syndicator will be unmatched.
Oh my God, 100%. I mean, I think that many people forget the underlying methods of which how our species actually lived as long as it did is because one thing that we're really good at is telling other people how bad something is, right? So meaning that if there was a bad fruit, if someone ate a fruit, I would observe it. Then I'll go tell the rest of the tribe, "Oh my God, don't eat that fruit. Don't eat that fruit from that tree. It's really bad." Same thing goes for investors, right? If you lose money without really communicating with them and figuring out or telling them what happened and what the solution is, it doesn't matter. They're going to go tell their friends about how much you suck, and the chances of you keeping that investor long term is slim to none. And they're going to tell all their friends about you too, which makes it even worse.
It's not what happens to you, it's how you handle it, right? And so that, that investor can go out there, and I even use him as a reference. You go out there and say, "Hey, I haven't screwed up a couple of deals early in this career. You get the benefit from that." And I always knew what was going on. And I'll never forget when I was apologizing that it just, we couldn't seem to catch a break, and we were pivoting again for like the fifth time on our 35 unit C deal. There was probably a D plus at best. He said, "Hey man, I don't take pitchers out in the fifth inning. You keep throwing the ball." And he wouldn't have been saying that if I was trying to hide or cover up stuff. The other warning or PSA I want to put out to new entrepreneurs and syndicators who want to grow and go far. At this point in the cycle, I know everybody's thinking there's a bunch of deals going to be coming out because of COVID. There's less margin for error than there were even a few years ago. And I would still highly recommend in underwriting to find somewhere to have some fudge factor, whether you're betting on you put in a higher interest rate than you think you're going to get, or less rent growth than you think you can get. Somewhere, leave yourself some room. It's really aided us over these last few years because of, one thing in the list of 100 things doesn't go your way. You're still doing better than you projected with your investors.
I think that's huge too. I think one other thing as well is something that you mentioned about your investor, that conversation. That investor that you're vetting right from the onset needs to be a good individual, so to speak. That's the best word I can come up with. Meaning that they're not going to be jerks about it. They're not going to be like, this is the last amount of money they have ever, and if you miss this, you're done, right? It can't be that situation, because they'll be blowing up your phone and your email the entire time you own the asset, and more so go south.
Early on, stay away from people that can't live without the cash flow you're distributing. Because when you're early on, you can say, "Listen, there's a lot of things that can go wrong. We can just stop paying cash on it and we can ride through that storm." Well, that's fine unless somebody's grocery money or prescription budget, right, is the cash flow that you said you were going to send them. So that's another reason to only work with accredited high net worth individuals and families. Watch out for the retired couple in their IRA. That's a great place after you've grown a platform and you're highly confident in your ability to deliver cash flow. But maybe, like you said, something to stay away from when you're cutting your teeth.
Absolutely. So now, tell me about the next 5 years for your business. So currently, we're going through a bit of a slowdown, so to speak. I don't think it's going to be long term, but how do you see what's happening today impacting you for the next 5 years or so?
Yeah, my one word response is vindicated. I built my investment thesis to do better in a correction. And the last few years, we've been really, really careful about what we bought. So very few deals bought in 18 and 19. And this year, we're getting tremendous deal flow. The deals we did buy, we're still able to raise rents. We've actually increased revenue with higher occupancy because we're seeing more demand for our niche and our market. I know that's not the case everywhere, but there's a lot of markets like that. We're at the upper end of workforce. So for us right now, it's really rinse and repeat our formula. We switched to a fund or multi-asset private placement. Some characteristics of a fund, still the same underlying deal structure as a single asset. It's just now, Augustino, if you're investing with me, instead of saying, "Hey, let's go out and buy one project together," we're going to go out and buy 5 to 8 under very strict acquisition criteria. Couldn't do that without my track record and trust that I've built with my investor audience. But it does add a higher degree of diversification within the portfolio, a higher degree of a higher return for everybody. No longer have to worry which deal is going to be the home run and which deal is going to be the double or the triple. And we foresee continuing to scale that model, and it's a lot of fun for me. The management company is not a profit center. It's this beautiful machine of people that execute my wealth strategy for my own capital, for my family, my close relatives, and my investment partners. That's the job of the management company, is the execution. And so rather than be miserly with that revenue stream, we're constantly reinvesting it in our culture, our people, the tools they have at their disposal. So I get to have a lot of fun, push on the team, who's the next key hire as we continue to grow this thing, to put a number count on it. Madam Market sometimes has a different idea, and we can only move as fast as she'll allow us. But deal flow seems to be picking up, so I'd like to see us somewhere close to 10,000 units in the next 5 years.
Excellent. Awesome. Well, I know you're going to hit it. I have no doubt in my mind.
Thank you, brother.
All right. Well, guys, if you want to reach out to Ivan, you can reach him through his company website at barrattassetmanagement.com. Hope you got a lot of great insight on capital raising. Thanks for tuning in, and I'll see you in the next one.
Thanks for having me. It's been a pleasure.
Thank you for listening. We hope you enjoyed the Bulletproof Cashflow podcast.